Okay, Pfizer released their quarter this morning in the pre-market and announced a merger with Mylan. So let's get right to it. We'll start with the earnings per share. Excuse me. Release. So revenue was down a little bit, 1.2%, but earnings per share was up 3.9%, and that was a beat of 6.7%. We don't seem to have the consensus revenue. I've been liking Pfizer for about 3 years now, 2-3 years, and it's looked as good as it's looked in a long time. Improving revenue or improving return on invested capital, we always look for that. I think just using our model really helped us here. There's some companies that we just call really well, and Pfizer's been one of them. There's some companies we don't call quite so well. It's just reality, but this is one, and I love this when we feel like the model is just the right tool, and it really feels like it in this case because we've called it so well. And I'll show you what I mean. Let's check it out right here. And you see, this period back in, let's see here, 2003 had really good returns, but started coming down. We were definitely not supporting the stock. We were like, oh man, this is a disaster. 08 started to rebound. This was a little bit of a head fake. It couldn't sustain this 22%. We probably were out of it during this little period here. I don't have it off the top of my head here, but I know I wouldn't have been in even though the shares were going up. So that's a little bit of a miss on our part, but probably definitely around this time when it went from 12, started moving up 13 and then to 22. That's our wheelhouse. We see improving return on invested capital as long as valuation's fairly reasonable. We're usually there, and we definitely were there for about 3 years now, 2-3 years. And you see the valuation. I haven't touched it. I could easily argue. I'll just make a case here, and we'll just change the fade a little bit, and the final year return on invested capital. Oops, what's going on here? I made a little typo there. And you see significant value. I don't want to get into what that value is, but it's significantly higher, and that's kind of what we would see, and that's why we'd be bullish. Actually, quick look at their dividend history as well. Pretty good. I'd really focus on the 2014 period and beyond. So 46% payout ratio, 3.2% yield, and growing. So you're probably going to get an effective yield much higher than 3.2%. Okay, now merger with Mylan. So they're just talking about it's called Upjohn, and it's the after patent unit. So sort of generic, I guess, but they call it the after patent unit, and they're completely taking over Mylan. So what does Mylan look like? Let's take a quick look at Mylan here. There it is, and you see the history is pretty good. A little bit inconsistent, let's ignore this 2007, that big dip there. That seems a little crazy, but regardless, it is certainly a little bit cyclical here, right? A little bit crazy. Stock kind of goes a little bit crazy too. I do think right now, yes, returns are coming down a little bit, and the shares have been just absolutely terrible, and that is because of the pressure from Congress and just in general from the American people that their pricing is too high. They're supposed to be, a generic lower your prices kind of thing. And I think it's their insulin. Yeah, not insulin. EpiPen. EpiPen is they're one of the number one. I think they might be number one market share, and have practically a monopoly on the EpiPen, or they did. And they brought the CEO in front of Congress, and they were charging an absurd amount of money, thousands of dollars to get an EpiPen, and probably cost less than $10 to make. And of course you're going to pay for this thing because it's a life and death situation if you need it. And there's considerable backlash on that, and they've never really gotten over that. They tried to lower their prices and had tried to explain why it was fair and blah, 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 blah. But didn't really go over that well. Now, having said all that, pretty good return on invested capital. This is not going to be for, I would say, ethical investing, ESG investors. This is not going to fit your criteria. But I would say it's a pretty good deal for Pfizer, given that the returns have been pretty good. Merging it with their after patent unit, I think will probably make a lot of sense. So Mylan shares are up about 20% in pre-market. I think the merged entity makes a lot of sense. I think it's a good move for Pfizer. If you're a Mylan shareholder, you will get shares in a spun out version. You won't get shares in Pfizer. You'll get shares in the spin out, and it's unnamed yet, but it's the Upjohn aftermarket business unit of Pfizer. Personally, I'd probably hold Pfizer instead of the spin-off. I think Pfizer looks, as I said, pretty good. So, and we've been supporting it all along. This merger just actually strengthens that. Pfizer's going to own 57% of the merged entity anyways. So you kind of get everything wrapped up in one. So that's how I'd play it. I just hold Pfizer. Thank you for watching our investment video. This is the same analysis we provide to our institutional clients. Want to improve your portfolio? Simply subscribe to our YouTube channel below, or better yet, go to our video website at video.fsavaluation.com and get access to the entire library.